Hello traders, the title of the video is Mastering the Second Elliott Wave like a Predictive Fractal Pattern, a trader. Do you want to master the second Elliott wave like a predictive fractal pattern trader? If yes, well, you are at the right place and also at the right time. Let's begin how to master the second Elliott wave like a predictive fractal pattern. The picture that you are looking at, that's not me. All right, that's not me. All right, like a trader says, "Oh, you are fat, you must work on your voice." That's not me. So that's Mr. Benoit Mandelbrot. Benoit Mandelbrot is the father, so to speak, all right, the dominant force when we are talking about the topic of predictive fractal pattern. It's a French it's a French American, all right, that came out with the predictive fractal pattern. You will see a lot of videos on YouTube about Mr. Benoit Mandelbrot. That's him there, a very handsome gentleman. All right, we owe to Mr. Benoit a lot of respect for all the hard work that he had done to explain that complex subject, that exciting subject of predictive fractal pattern. All right. Let's go back to the drawing board, talking about how to master the second Elliott wave like a predictive fractal pattern trader. All right. Today, I have recorded the first video that I call Elliott Wave Trader. Explain the first Elliott wave from the viewpoint of fractals. Have you watched that essential video? If not, please do so. The second video that I am recording today is this one, mastering the second Elliott wave like a predictive fractal pattern. So in that video, I was telling trader that the first way is the blueprint of the trend, is the signature of the bulls or the bear that are creating either the bullish trend or the bearish trend. Without the first Elliott wave, without analyzing, understanding, mastering the first wave, one cannot forecast the best part of the Elliott wave cycle, which is the multi wave. Now, talking about forecasting the market, because that's the main goal of all Elliott wave traders, to forecast the market. We also use the second wave to forecast the corrective wave after the motive wave. So you want to forecast the market, you want to pay attention to the first wave, but also to the second wave. I want to go a little bit deeper, because what I'm trying to do is not to give traders just tips and tricks to make $5 here and so on, but it's to help ordinary traders to master the subject of Elliott wave. All right, that's all. So you can do it yourself. So the second way, we use the second way to forecast the corrective wave after the multi wave. There are more to the second way which I have not mentioned before. The second way, what kind of traders are trading in the second wave? A bullish trend is about to begin. Now we see the second wave. Who are these people? That's the correct answer. Who are these people selling when the price is due to go up? Are they out of their mind? Those are the people who do not believe in the trend. So they say, all right, this stock is doomed. It must go down. All right. I don't believe that this trend will continue. All right. Why should people buy? Then they were selling. So those are the people opposing the trend. So in a downtrend is about to begin, and those people will come and buy. They do not believe in the trend. Or can we call them the blind traders? They don't know about how the financial market functions. They don't see what the smart money sees, all right? And they are doing the opposite thing. They are fighting the trend. We should feel sorry for them. You need to also understand that the second wave is not a profit-taking. Why? So the smart money, the hedge fund, the big financial institution, the mutual fund, they take position. Now, understand, the only time that we will say that the second wave is a profit-taking is when the second wave has cancelled the first wave. So if the second wave has cancelled the first wave, we will say that, well, it's a capitulation, it's a profit-taking. Those who enter the trade during the first wave do not believe anymore in the trend, and they come out. So let's wait and see what they will do next. We are following the money, the smart money, the big money. All right, yes or no? But generally speaking, the second wave is what a lot of Wall Street traders call the dump money. I don't like to use that word because it's not a good word, but they call it dump money. All right? People who do not know what's going on and they want to sell because RSI is overbought or RSI is oversold in a downtrend, and they want to buy in a downtrend, all right, and so on. So those are the people that I usually buy during the second wave. They do not believe in the trend. They want to fight the trend. They are against the trend. They are against the current market. It's like a child who do not want to look like his father. See it that way, all right? So are you that kind of person? So in fact, we are just what we call the individualization of our father. So you are your father, okay? You come from your father, all right? That sperm is you. Come from your father, you are your father. Though you are in a different body, all right? Individual, independent person. Well, you can't deny that you are your father because you come from it. The source is the father. Well, it's your father and the mother, okay? You see? So those are the people fighting a structure. It's like somebody trying to sow a seed in the winter, all right? It's not a good thing to do. People that are doing things that they shouldn't do, okay, in a particular season, this way. So those type of traders, you have to understand that first we have a downtrend, then we have a correction, then we see the first wave. So the market is saturated by the bear, and those bearish traders were enjoying themselves so much, and they don't want to give up. So as the market, the sentiment has changed, and a new bullish trend, a reversal is taking place, they still want to sell. The same thing is happening, all right? The market was bullish before. Now, a reversal is taking place. A bearish trend is about to begin. Those traders believe that the market should go up forever, and they will buy in the second bearish wave. So you want to understand who are those people that are trading during the second wave. I need to remind traders that this video is an essential tutorial. It will be up to 30 minutes long. All right, so it's not a 10-minute video. It's something like 30 minutes or more. I'll try to make sure it stays within 30 minutes. All right. Okay. So here it is. So that's the second way. So what we do, practically speaking, using the theory in the practical fashion, the area wave theory, the practical fashion, we use the second wave to forecast, all right, either the fourth wave or the corrective wave. Pay attention to this stock here. This is a Walmart Incorporated in American stock. All right, here it is, WMT. And this is the second wave. See here, this is the second wave. This is the third wave. This is the fourth wave. And we are now in the fifth wave. Fifth wave right there. Is that a flat correction being formed here? Or is the fifth wave being extended? That is the question. But with this second wave right here, see, it took how many years? 94, 92, 4 years for the second wave to be completed. All right. But look at the fourth wave here. It has been long, though. It has been long. So originally, because it took 4 years for the second wave to be completed, we will be expecting that the fourth wave will be quick. Talking about the duration of the fourth wave. But you can see that it has been prolonged. So we know that if the fourth wave it has taken 4 years, we will expect probably the fourth wave to be take almost only 1 or 2 years or maximum 3 years. But we will put a limit here. We say, all right, if you go over the 4 years, by using the length, the duration of the second wave, if we go over 4 years, we will see that it will be extended. So after 4 years, fourth wave still going on, we know that it's going to be extended. It's a continuation of a consolidation here. So it has taken more than 4 years, almost 8 years, for that fourth wave to be completed. So we may say here that the second wave has been swift, S-W-I-F-T, swift, all right? Therefore, the fourth wave will be prolonged. But at this point in time, we are just going one step at a time. As it goes beyond fourth year wave, as it goes beyond the 4th year, we will see that it will be extended, talking about the duration of the fourth wave. So we use the second wave to have a bit of idea what is likely to take place during the fourth wave. But not only that, talking about mastering the second area wave like a predictive fractal pattern, we use the second wave to focus the corrective phase. So what we do in that case is this, practically speaking, practical Elliott wave. All right, hold on please, traders. I want to write something down for myself. All right. We highlight the second wave. And now we bring it to the laboratory. We use microscope, so to speak, to dig into the structure of the second wave. What we are trying to do, we do not just want to look at it, we want to look inside it, to dissect it and to analyze it, to interpret it using Google Translation. Now this to make you laugh a bit, all right, to translate the language of the second wave, to understand the message that the second wave is communicating to us. All right, you see here? This is it. All right, so when we are doing that, what we are doing in fact is that we are combining the area wave theory and the predictive fractal pattern of Mr. Benoit Mandelbrot. All right, here it is. So we want to see the structure of the second wave. So I told you that I recorded a video today that I titled Elliott Wave Trader Explain the First Elliott Wave from the Viewpoint of Fractal. We were looking at a dominant force that was in place, the first bias, those who will support the trend that is starting. Now, the second wave is reflecting, note it down, the character of those who are opposing the trend. They are opposing the trend in the second wave. There is a pattern that is associated to those market participants that are fighting the trend. This is about the predictive fractal pattern. So what I was saying to trader in that video before is that a predictive fractal pattern is a dominant force, a dominant character, a dominant pattern. So in the second wave, those type of traders that are fighting the trend may have a dominant character, a dominant pattern, a dominant structure, a common characteristic. With that, we can have a bit of idea how the corrective wave of the Elliott wave cycle will be formed. Looking at this second Elliott wave, you can see that it just rolling down gently, 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 and it's also a shallow correction. Therefore, with that information, I can expect, I don't want to use the word forecast, I can expect, not guaranteed, all right, I can expect that maybe the correction will be something gently, gently rolling it down, will be shallow correction. But as I told you already, we have used that second wave to forecast, to expect a certain behavior during the fourth wave. But when we are talking about mastering the second wave like a predictive fractal pattern, our attention is on a dominant force, the dominant structure that is taking place during the second wave, the dominant behavior that people are adopting during the second wave. We want to go a little bit deeper, all right? So suppose you were here like sorry, my apology to traders. You were one of those traders here, okay? So it took 4 years. You were trying to push it down. You were against the trend. 4 years, you were digging to sell, and the price not going anywhere. And then the next thing, the bull, okay, did win the fight. So those are the second wave are fighting the one of the first wave. But finally, the bull has won. Will you forget that? You won't forget easily. You will not forget. So you can see here during the fourth wave, those traders, they will say, well, with 4 years it took us to fight those people. So the same people who do not believe in the trend, after they see a weakness at the end of the third wave, will try to sell again and say, I told you before that this is not going anywhere. They will try to sell again. But this time they will be a little bit more careful. So they may sell it for 1 year, 2 years, and most of them will run away after that because they will say, well, I don't want to be around again fighting these people for 4 years. 4 years, we fight them unsuccessfully. After 2 years, if I fight them after the third wave, I will only fight them for 2 years. I want to go away. You can see that after a few years, after 2 years, you see the price from a lower high here. Or they couldn't push it very much down anymore after it rallied up a bit here. So the price are consolidating. And those people here that fought it for 4 years, they know if they stay in place, you see, after 2 years, they give up a bit, you see. Most of them know that, oh, we fight them for 4 years unsuccessfully, I'll only fight them for 2 years. It's getting a bit too much for me. So after 2 years, most of them came out. They were not digging into it anymore. They give out a price bounce up. They say, well, some of them came back again. They say, all right, well, it looks like it's going to go down again. And then again, they push it down. 2 years. They give up again after 2 years. All right, and they let it go up. They say, all right, the bulls are coming back. The bulls are coming back. All right, you see, this is it. It's like the bulls are coming back. The bulls are coming back. They run away. And then again, after 4 years, most of those people that are smart will say, I don't want to be in this fight anymore. It's taking too long. Okay, you see now? So then, and then slowly, you see, this has been an extended correction. But I have to say that those who were here were quite stubborn, and for 4 years they were fighting the bulls. But here they fought them more than 8 years, and after the first minor wave or the fifth wave, they came back again, tried to sell. So the point I'm making to you here is that the second wave has a typical character. So you want to master the second wave like a predictive fractal pattern traders, you want to concentrate on the dominant character, the behavior of those people, and go into their mind. That's why we have the alternance between the second and the fourth. So if the second wave is very quick, it takes a short time to be completed, all right? The fourth wave will be prolonged. It's a reversal. Those people do not want to experience what has happened before. So it was swift, now they want to prolong it. If the second wave is prolonged, they get tired, they don't want to stay again, they want it to be swift, and so on and so on. And that's why here you have this kind of triangle. They give up after 2 years, they come back again after 2 years, and so on and so on. So those people, we want to understand how they will react, right? And by looking deeper into the structure, the price structure, talking about, right, how deep was the second wave in relation to the first wave, talking about Fibonacci retracement, what kind of Elliott wave pattern did occur during the second Elliott wave, all right? What kind of market pattern, I'm not talking about chart pattern, market pattern did occur during the second Elliott wave. Is it a triangle? Is it Okay, a gently declining channel is a gently rising channel for the bullish rally in a downtrend. You want to pay attention to the whole package, talking about the size, the form, all right, the structure, what is inside, what is outside, everything relating to the second wave. With all this information you gathered during the second wave, all right, you have a bit of idea what is likely to take place during the corrective wave, but also during the fourth wave. If I want to go a little bit deeper, I will say to traders that are more advanced that if you want to focus the fourth area wave, generally speaking, the normal practice is to use the second area wave, but I want to encourage you also to pay attention to the fourth wave. Why? That's a very good question, because there is alternance between the second and the fourth wave. I don't want to say to you that the area wave principle says that we can use the fourth wave to forecast the corrective wave. But because of the alternance between the second and the fourth wave, it will be wise for somebody who wants to use the area wave principle like an expert area wave trader to pay attention to the fourth wave also. So it is wise to dissect, so to speak, the structure of the second wave, but also the structure of the fourth area wave in order to have a bit of idea what is likely to take place during the corrective phase of an area wave cycle. Talking about the predictive fractal pattern or mastering the second area wave like a predictive fractal pattern, you want to concentrate on the predictive fractal pattern that occur during the second area wave. It's deeper than that. All right. So I don't want to repeat myself too much. There is another web page that you may check out at www.dprotrader.com. Predictive fractal pattern. There is a web page here, predictive fractal pattern at dprotrader. You can come and read everything, and most importantly, try to understand what we are talking about here. All right. Another page, another video that I showed trader in the first video is here. How to combine fractal and the wave principle at 24ElliotWaves.com. All right. With all those information, you are now ready to master the second area wave like a predictive fractal pattern. All right. So we know that if the second area wave is very deep, all right, the fourth wave is likely to be shallow. Why? Now, the reason is this is again about the character, the behavior. So we are talking about fractal, we are talking about a character, a dominant character, a dominant behavior, a dominant force, a dominant structure, a dominant market sentiment. All right? This is what we are talking about. All right? So, because those who do not believe in the trend, they sold it and they bring the price down maybe to the 61.8% Fibonacci retracement level of the first wave. Is quite deep for the second wave. Or they bring it down to 78.6% Fibonacci retracement of the first wave. They almost destroy the trend during the second wave. But for one reason or another, the bull managed to kick those people out of the market. And then we have the third area wave. But because of what has happened at the end of the second wave, it was deep, they fought hard, they almost succeeded to destroy the first wave, but they couldn't. Because of what has happened there, those people who were trading during the second area wave, do not forget, all right, that we push it hard almost, but they kick us out. So therefore, during the fourth area wave, as they are trying again to push it down, they won't try to push it down too much because they don't want to waste their time. They will quickly come out. Most of them will try to go away because they say, well, last time we pushed it to 71.8% or 61.8% level, they kick us out. Now it's now at 38.2% level. I better go out before they kick me out. That's why sometimes you may see that that. Okay, so use the structure. Go beyond. All right, this is what I'm talking about. Beyond. Okay, the price structure, talking about the character, the behavior, the mindset. So the of those who were trading during the second wave, those mindset, those market sentiment are likely to take place again during the corrective phase. At the end of the trend, we are likely to see similar behavior during the corrective phase. This is about mastering the second Elliott wave like a predictive fractal pattern. I've said enough, and I will not repeat myself. I haven't been over my 30 minutes, and I think you get the message, all right? So this is it. So we will be recording more video this year. So there are more video I'm going to record about how to combine Elliott wave principle and fractal, talking about practical use of predictive fractal pattern of Mr. Benoit Mandelbrot, all right? And the wave principle. All right, there are more to this, and every day, all right, I spend my time to understand more this topic of predictive fractal pattern. The financial market is fractal. The Elliott wave principle, the Elliott wave patterns are fractal patterns. All right. There is a psychological, side to the Elliott wave theory. We are talking about going to the mind of market participant at one stage in the market. So what we are doing as a predictive fractal pattern trader using Elliott wave, we are not just looking at the price structure, the Fibonacci retracement, the Fibonacci extension. We are going beyond that. We are analyzing the behavior, the character, the psychology of those market participants in order to have a bit of idea what they are likely to do during the corrective phase. So the psychology of the first wave will be reflected during the multi-wave, but the whole psychology, including the price structure of the second wave, will be reflected one way or another during the corrective wave. I need to remind the trader that this is not an exact science. This is a tool. It's something that we can work with, and it has helped traders over the year. As you can see here, the second wave took 4 years. As it goes beyond 4 years, we know straight away that this correction will be prolonged, because if the second wave has taken 4 years and now the fourth wave is going beyond 4 years, it means that it will be prolonged, talking about the duration of it. If the second wave is deep, the fourth wave is likely to be shallow. It's alternate market sentiment, talking about going into the character of those market participants. All right, I'm out of breath now. It's time to drink my favorite drink. All right, so if you have any question or suggestion, all right, put in the comment section. Don't say that I'm fat, that I should work on my voice, all right, or that Google may punish you for that. Don't say anything personal, okay, my friend? All right. If this video has been truly useful to you, let us know, please, by sticking your beautiful thumbs up, okay? All right. But if you think that, George, I'm not impressed, all right, I hate you so much, whether you have done a good job or not, I will always mark your video down, because I hate you so much. You are revealing things that you shouldn't tell everybody. I'll mark it down. Mark it down. And so next time, okay, we'll try to improve our next recording. However, if you think that it's an amazing tutorial, you say, Joe, you have done a very good job. It's an essential tutorial. Everybody should know about it. Feel free to share with your friend on Google+, on Twitter, and also on Facebook. However, if you have not yet subscribed to our channel, hit the subscribe button, subscribe, and make sure you click on the bell icon, so anytime we record a video, you will be the first person to be notified. Be sure to also subscribe to our website, all right? Subscribe to 24 Elliott Wave, and subscribe to also to dayprotraders.com website, where we are talking about predictive fractal pattern. Before we go, my friend, if you want to support what we are doing, be the first person to put $1 in the box here. That will help us to keep this website and what we are doing going on for the future. All right. Until the next time, enjoy yourself and be very happy. We are the TSTW24 traders talking about mastering the second Elliott wave like a predictive fractal pattern of Mr. Benoit Mandebro. Have I been over my 30 minutes? As I promised, you have done exactly 30 minutes. Happy to meet you all, and I will speak to you soon.